Welcome back, guys. So a few of you have been on to me about, how can I run a greater level of granularity in terms of analyzing a stock for a long-term investment. And to be honest, guys, there's a number of factors at play, but I'm going to try and show you a very simple and efficient way to get the ball rolling in making that ultimate decision to invest in a stock for a long-term position. So we're going to follow the steps that we would have followed on one of our previous videos in terms of a screener. So you're going to head over to Yahoo Finance, click on screener, and it's going to take you to your screener page here. So we're going to create a new screener unless you want to use a pre-filtered one, and we're going to set it at large to mega cap. For a long-term position, again, you want that reliability, you want steady growth, you want something that isn't going to drop 20 to 25% in a week's trading. So you might see less of that with the more larger or heavily capitalized companies. Price intraday, again, we're going to remove that. We're going to add some additional filters. So in our previous video, we looked at average volume and volume. And that was specific to a day trade position. Here, we're more concerned with the long-term position and growth of a firm. So what we're going to look at is the price to earning ratio. And I'll talk through these. And there's a few other things as well. But for this simple example, we're going to use the price to earnings ratio. We'll also look at, because with a long-term position, you might also be interested in the dividend. So another indicator of a healthy company is consecutive years of dividend growth. So we're going to apply that as well. And we're going to set the sector as financial services for this example, guys. And the reason I say financial services is because with the financial services, you can get a clear indication in terms of the overall health of the economy. So usually the banks are a good indicator in terms of how the world economy and the capital markets are performing. So we're going to use financial services for this example. For the PE ratio, I mean, the industry average on the financial services is around a 14 PE ratio. Um, Again, the P ratio it can vary depending on sector. So you might see, larger P ratios for, tech and, consumer cyclicals like the EVs. Um, but generally for financial services, about 14.5. So we're going to set that as less than 14.5. And for consecutive years of growth, I think 5 years is a good indicator. So we've now narrowed it down to 15 potential long-term investments. So let's hit find stock. Again, you can save it if you want, guys, but let's just maybe play away at this for a bit. Um, so again, just looking through, you can see again heavily capitalized. P ratios are they're quite good in many instances. And again, the 52-week range of the stock price gives you an indication is it sort of the lower end or the upper end. All, if not most of these are coming to all-time highs. So what I would be saying here is, okay, these stocks are near all-time highs, potentially, or it's more likely that they'll pull back slightly. But once they've pulled back, I've run my fundamental analysis. I believe in the future growth of this company and I'm going to enter a position. So let's use Morgan Stanley as an example, guys. So we're going to pop open Morgan Stanley and that'll take you to their homepage. Again, in terms of key things to look out for here, first thing, first year price target, 76.14. Stock, again, trading at 75.80. Back to the point, it's near an all-time high. It's also near the first year price target. You might think I might see a quick, I might see a pullback in the short term, and that might be a better entry point. But ultimately, with a long-term investment, you're more concerned about, where it's going as opposed to where it is now. Again, you can see the dividend 1.85%. So that's a nice healthy dividend. As you can see over the years, steady growth on that dividend. P ratio 1281, so below the sector average of about 14.5. So everything here looks positive. We scroll down again very quickly, guys, and other things to look out for here. Recommendation. So again, most analysts covering this stock are giving it a 2.1, which is a very strong rating to buy. You've got a view of the low, average, and high price targets, and again the upgrades as well and downgrades, which can potentially impact, the price and share. So the other things really to look at here, guys, on this page is you can look at the financials, but what I'm concerned with here is the statistics. So if you go into the statistics, one of the key indicators you might be concerned with is, the debt to equity ratio. Essentially, how levered are the company. The lower the risk to, the debt to equity ratio, the less likely the company is to be at risk of loan default. So the higher the debt to equity ratio, the more levered the company is and the more it's borrowed. So I can see here, if I go to the balance sheet, that the total debt to equity ratio is 1.96. So that's quite strong, and that's positive. So overall, I can see that this is painting a positive picture as a potential long-term investment. Again, most recent quarter in case you're wondering, what's the MRQ? So everything looks strong. Another thing you might do, guys, is you've run a very quick snapshot fundamental analysis on Morgan Stanley. The next thing I would actually do is I would then head on over to their website, head to their investor relations section, and just get a general feel in terms of, their ERs, some of the presentations, what some of their, their publications have been. And like, for example, I found this sort of report back in February, Morgan Stanley to acquire E-Trade, creating a leader in all major wealth and management channels. So this is very strong for Morgan Stanley, a good indicator again of future growth and potentially, you might see even more growth over the next 6 to 12 months, especially during the lockdown, and you see more, more day traders come onto the market and get involved. So there's a lot there. Again, you can sift through it and have a look through other things on our insights and their investor relations. But overall, it's painting a strong picture for you that Morgan Stanley is potentially a good long-term investment. So guys, this is just a very quick example. You can apply it on a number of things. And again, just to reiterate, you will also look at other things as well, but this is just a very, very quick snapshot analysis in terms of how to run your own fundamental analysis on a company ahead of a long-term investment. So hopefully, guys, you've enjoyed this. If there's any questions, again, please feel free to reach out, and thanks for listening.